The Australian share market is coming under pressure this morning with a fall of 0.4%. It comes after a weaker session on Wall Street, where Caterpillar came out with a weaker than expected result and citing weaker demand from China and the impact of the US-China tariff war. We saw Caterpillar shares tumbling by 9%, and that's significant because it is seen as a barometer of global growth. Here on the Australian share market, we are seeing most sectors coming under pressure today, with the exception of the material sector and the telecom sector. The telecom sector has been boosted by Telstra, which is trading up by 3% on the market. That comes after TPG's announcement that it will be ceasing the Australian mobile rollout due to the ban on Huawei's product. TPG is saying that it doesn't anticipate any write-downs for the year, as the costs have been capitalised, and it doesn't expect to see a change to FY19 guidance. The TPG shares are trading down 2.5% on the market. We are seeing a number of upgrades and downgrades helping to move share prices today. Credit Corp up by 7%. It's come out with a strong half-year number and also upgraded its full-year guidance. First half net profit after tax up by 13%. Its consumer loan book saw growth of 18%, and impressively, US revenue was up by 71%. It's upgraded its full-year outlook for net profit after tax to between $69 to $70 million from $67 to $69 million previously. That confirms that Credit Corp is in that upgrade cycle, which it's been in for a number of years now. Having a look at Sky City, which is up by 4%. The company saying that it saw a strong end to the half year. It expects half year earnings before interest, tax and amortization to be up by 10% and normalized net profit after tax to be up by 11%. The company saying that the full year earnings should be slightly ahead of previous guidance, which was for modest growth in EBITDA. Meanwhile, Eclipx is down by 13%. The company saying that it expects the full year to be broadly in line with FY18. First half expected to be around about 40% of its earnings before interest, tax, amortization result due to a softer consumer, as well as continued softness in the insolvency industrial division. Responding to an expectation of softer first half performance, the company has commenced implementation of further cost reductions and a cost reduction program. The shares down by 13% on the market, and Incitec Pivot is down by 8.5%. The company flagging an earnings hit from unplanned outages. The company expecting to see a hit of $45 million for the full year. So all in all, we are seeing softness on the Australian market after that weak result from Caterpillar and that negative lead from Wall Street.